The first major shift needed to achieve wealth isn't about earning more money, but about how you think about it. Robert Kiyosaki, author of Rich Dad, Poor Dad, always says that the rich don't work for money. They make money work for them. This simple idea can change anyone's life. For many people, the path to wealth seems directly tied to working harder, earning more, or getting a second job. However, the rich understand that the real secret lies in investing in learning how to multiply what they already have. When you change your mindset about money, you begin to see opportunities where you once saw difficulties. Imagine that instead of feeling overwhelmed by bills and debts, you start seeing each expense as a chance to learn how to control it, even turning it into an ally on your path to wealth. Instead of thinking, "I earn too little, I'll never be rich," you start asking, "How can I make what I earn work for me?" This shift in mindset is crucial for financial success. It doesn't matter how much you make, but what you do with what you have. When you change the way you think about money, you start acting more strategically and consciously. You begin to understand that building wealth requires being smart with your resources, investing in assets that grow over time, rather than spending everything on things that bring no return. Here's a small reflection exercise. Think about what you truly believe when it comes to money. Ask yourself if you honestly believe you can become wealthy, or if you've always thought that wealth was only for other people. That's the first step to changing your mindset and beginning your journey toward financial freedom. Now that you've shifted your financial mindset, it's time to start putting things into action. The next step is to organize your finances. Robert Kiyosaki teaches that without a clear understanding of what comes in and goes out, you'll never be able to build a solid foundation for wealth. Think of your finances like a garden. If you don't plant, water, and care for it, nothing will grow. Organizing your finances is the first step to taking full control of your money. The first move you should make is to track every cent you earn and spend. It may seem simple, but many people don't truly know where their money is going until they start writing it down. You don't have to be a financial expert. With basic tools like a spreadsheet or a finance app, you can track every expense, from breakfast to grocery shopping. Often it's the small expenses that quietly drain a big part of our income. The key here is discipline. Once you start writing everything down, you'll clearly see what's necessary and what isn't. Many times, when faced with the actual numbers, we realize we're spending money on things that don't add value in the long run, like unused subscriptions or habits that don't contribute to our financial well-being. Getting organized brings clarity and helps you make better decisions about what really matters for your future. Start by recording your daily expenses, no matter how small. Over time, you'll notice many of them can be reduced or eliminated, allowing you to redirect that money toward building your future. Now that your finances are organized, the next crucial step is to avoid bad debt. This is one of the biggest obstacles to building wealth. Robert Kiyosaki teaches that it's not debt itself that's dangerous, it's the kind of debt you take on. There are two main types: good debt and bad debt. Good debt is the kind that helps you generate more money or value, like a loan for real estate or a business. Bad debt is anything that doesn't provide a return, like financing a new car or smartphone. Did you know that the moment you start paying interest on something that doesn't generate income, you're actually getting poorer? That's bad debt. Unfortunately, many people fall into this trap without even realizing it, buying things they don't really need that end up draining their finances. For example, financing a new phone or splitting payments for clothes you didn't need might seem smart in the short term, but in the long term, they only increase your monthly expenses and reduce your ability to invest in things that truly generate wealth. The key here is understanding that no matter how much you earn, if you're always accumulating bad debt, you won't be able to build a strong financial base. The first step to getting out of this trap is to know exactly how much you owe, to whom, and at what interest rate. With that information, you can create a strategic plan to pay it off, starting with the highest interest debts, which are the most damaging. It's also important to recognize that bad debt is a major barrier to financial freedom. It forces you to keep working to pay for things you've already used, with no added value. If you keep accumulating these debts, you'll never have enough money left to invest in assets that could bring you income. Make a list of all your debts, including the amount, interest rate, and due date. Prioritize paying off the debts with the highest interest. This effort will free up more of your money so you can start investing in income-generating assets like real estate, stocks, or even yourself through financial education. Once your finances are organized and you've eliminated bad debts, the next vital step is building an emergency fund. This is one of the most important foundations for ensuring financial stability because it gives you security when unexpected events occur. Life is full of surprises, some good, some not. You might lose your job, face a medical emergency, or need urgent home repairs. Without a safety net, you could end up back in debt, which would hurt your path to financial freedom. Robert Kiyosaki recommends that before you think about investing or growing your wealth, you should have an emergency reserve. This fund isn't for spending on anything unless it's absolutely necessary. Its main goal is to be your financial safety net, so you don't need to rely on credit cards or loans when something unexpected happens. A good emergency fund should cover 3 to 6 months of essential living expenses. To start, set aside a small percentage of your income every month. It doesn't matter if it's just a little at first. What matters is forming the habit of saving. Over time, your fund will grow and you'll feel more confident and secure in making bigger financial decisions, like investing or starting a business. Keep this fund in a separate account, one that's easy to access but not mixed in with your everyday spending. Its only purpose is to protect you during difficult times without compromising your financial future. Start small. If possible, save even $10 or $20 per week. The secret is consistency. As you pay off debts and increase your saving power, your emergency fund will grow. And so will your financial peace of mind. Now that you've built a solid financial foundation and a safety net, the next step is to invest in something no one can ever take from you: your knowledge. Robert Kiyosaki always emphasizes that financial education is key to achieving financial freedom. Unfortunately, schools don't teach us how to manage money or invest wisely. That's why it's up to you to seek this knowledge on your own. Investing in your mind is what will allow you to recognize and take advantage of opportunities around you. That means dedicating time to learn about investments, personal finance, money management, and even entrepreneurship. The good news is, access to information has never been easier. There are countless books, videos, and free or paid online courses that can transform the way you understand money and investing. Kiyosaki is clear: financial knowledge is the most important asset you can acquire. With it, you'll be able to make informed decisions, avoid financial traps, and identify good investment opportunities. While many people chase higher salaries without learning about money, the wealthy focus on increasing their financial skills and applying them strategically. One of the most effective ways to start is through books. Robert Kiyosaki's Rich Dad, Poor Dad is a great start for understanding how money really works. But don't stop there. Seek out a variety of experts in investment and financial psychology. The goal is to keep learning and improving, because the more you know, the more power you have to build your own wealth. Dedicate 1 hour a day to financial education. Start by reading or watching educational content. Over time, this small daily effort will bring major returns because the knowledge you gain will shape your personal finances and guide smarter, more strategic decisions. With your mind sharp and your finances in order, the next step is to start creating an extra income stream. This is a key step to accelerating your journey to financial freedom. Robert Kiyosaki often says that true wealth comes when you stop relying on just one source of income. It happens when you become creative, using your time and skills to make money in different ways. When people hear about creating extra income, they often think it requires a big investment or a brilliant idea. But the truth is, you can start with what you already have: your skills, your time, and your creativity. Think about what you already do well or what you'd like to learn. You could offer services, teach, sell a product, or start a small project. The goal is to use your free time productively, turning it into an additional source of income. The benefit of extra income isn't just the money, it changes how you think. Once you earn money outside your main job, you start to see yourself as a producer, not just a consumer. That transforms how you value your time and effort, making you more proactive in managing money and building wealth. Also, that small side hustle can grow into something bigger. Many successful businesses started as a side income by someone trying to make their money work for them. Start small, but start with commitment, and it might become something big. Ask yourself, what skills or passions do I have that could earn extra money? Maybe it's selling a product, fixing electronics, giving cooking classes, or offering online consulting. Choose something you enjoy that has market demand and start now. Even if it's small, what matters is taking the first step. You've reached an important milestone in your journey to wealth. It's time to invest. One of Robert Kiyosaki's greatest lessons is that you don't need to be rich to start investing. In fact, he believes you must start as early as possible, even with small amounts. The key isn't how much you have, but the habit of starting and learning from the process. The idea that only the rich can invest is one of the biggest myths out there. If you wait to save a big amount, you'll delay something that could change your life. The secret is to start with what you've got, even if it's just $20 or $50 per month. By doing that, you're already making your money work for you. Over time, your investments will grow and compound interest will begin to work in your favor. Investing may seem intimidating at first, but remember, knowledge is your greatest ally. As you learn about different types of investments, like stocks, real estate funds, crypto, or even simple savings, you'll build a stronger foundation for your financial future. What matters most is being consistent and disciplined. It doesn't matter if you start small. What matters is that you start. Patience is also essential in this process. Remember, invested money doesn't grow overnight. Success in investing comes with time, when you dedicate yourself to learning and applying that knowledge consistently. The key is to maintain discipline and make investing a regular part of your financial routine. If you're just starting out, look for low-risk investments, such as index funds or government bonds, which are great for beginners. Start small, but be consistent. The most important thing is to start investing today, not tomorrow. As you gain more knowledge, gradually expand your investment portfolio. Now that you've begun investing and are on the path to building wealth, the next step is one of the most important and also one of the hardest: having patience and consistency. Becoming wealthy doesn't happen overnight. The wealthy know that real wealth building is a marathon, not a sprint. Robert Kiyosaki often emphasizes that the power of compound interest and consistent investing are two of the most critical factors in achieving financial freedom. When you start investing, especially with limited money, it's easy to feel frustrated by the lack of immediate results. But the secret to financial success lies in persistence. Your investments won't skyrocket in just a few months, but over time, you'll see that the effort and discipline were well worth it. Remember, with each passing month, you're building something long-lasting. Simply being consistent can lead to major rewards in the future. It's also important not to let anxiety or pressure push you into hasty decisions. The fear of missing out may lead you to make poor choices, like selling your investments during a market dip. The wealthy understand that during times of crisis or uncertainty, the best opportunities often appear. Patience in those difficult moments is what separates successful investors from the rest. Consistency, on the other hand, is what keeps you focused on the long term. Even if your returns seem small at first, each consistent contribution adds up. And the power of compound interest begins to work its magic. Create a monthly investment plan and stick to it. Don't stress about market fluctuations. Focus on your long-term goals. Remember, consistency is the key to financial success. Even if progress seems slow, every step forward brings you closer to financial freedom. The final step in building wealth is knowing how to seize opportunities during times when others see only crisis. This may sound counterintuitive, but it's exactly what Robert Kiyosaki teaches. While most people panic during economic downturns or financial crises, the wealthy see these periods as opportunities to grow richer. They know that in uncertain times prices drop and buying opportunities increase, but only for those who are prepared. A financial crisis doesn't have to be a disaster for you. In fact, it could be the best time to make strategic investments at very low prices, such as buying property in declining markets or acquiring undervalued shares of well-established companies. When fear dominates the market and people sell in panic, well-prepared investors buy with long-term vision. However, to take advantage of these moments, you must be prepared. That means having an emergency fund, a solid financial reserve, and a diversified investment portfolio. When you have those in place, you can act quickly when opportunities arise. That's exactly what many millionaires and billionaires do. They have the courage to invest when everyone else is afraid. Remember, in moments of crisis, what you do with your money determines your financial future. Instead of panicking like the majority, take time to understand the situation, educate yourself on the opportunities, and make disciplined, strategic decisions, not fear-based ones. Stay alert during economic downturns. They're full of opportunities for those who are prepared. Always keep a financial reserve and educate yourself to recognize undervalued assets that offer solid, long-term growth potential. Never make hasty decisions driven by fear. Use crises as a chance to acquire valuable investments at a discount. Now that you've followed all the essential steps to build wealth, here comes the final and most powerful secret: persistence. The journey to financial freedom is neither quick nor easy, but with consistent action, discipline, and patience, it is absolutely achievable. Robert Kiyosaki reminds us that wealth is not a destination, it's a continuous process. It doesn't matter where you start or how much you have. What matters is your ability to stay committed and keep working toward your financial goals. Building wealth doesn't depend on luck. It comes from smart choices made every day. Small actions like saving, investing, constantly learning, and making smart financial decisions accumulate over time and build a solid foundation for the future. By following the path of the wealthy, you'll realize that instead of hoping for a lucky break or a sudden raise, you're consistently creating opportunities and keeping your focus on long-term results. Remember, the real secret to financial success isn't getting rich quick or looking for shortcuts. It's taking strategic, consistent action every day toward your goal. As you become more disciplined, you'll gain more knowledge, and your investments will begin to bear the fruits you've worked for. The road may be difficult, but the results are worth every step. Don't give up. If you make mistakes along the way, treat them as valuable lessons, not failures. Every step, no matter how small, brings you closer to your financial freedom. Keep investing in your financial education. Follow the steps with consistency, and one day, you'll look back and realize you achieved everything you once dreamed of. Now that you have a clear roadmap to financial freedom, remember, the real difference lies in action. Many people procrastinate when it comes to making important financial decisions, whether it's out of fear, lack of confidence, or the idea that someday I'll start. But the truth is, the right time to act is now. The one day I'll start mindset is what prevents many people from reaching their financial goals. Money won't wait for you. When you take action now, you start building the future you want, even if the changes seem small at first. Every financial decision you make, whether it's saving, investing, or changing your spending habits, is a step toward financial freedom. Also, keep in mind that financial success doesn't come just from following the right steps. It comes from being flexible, learning from mistakes, and adapting to changes along the way. Don't let obstacles discourage you. They're part of the journey. What truly matters is how you respond to each challenge. If you stay focused on continuous learning and take consistent action, you'll begin to see long-term results. Compound interest doesn't apply only to money. It applies to knowledge too. Every day you spend learning more about how to manage your money and make it work for you is an investment that will multiply over time. If you haven't started yet, the time to act is now. Don't wait for the perfect moment, because it never comes on its own. Start with what you have, and with each step, you'll get closer to achieving the financial freedom you desire. Now, more than ever, you know what needs to be done. And remember, every small action counts. Keep investing in your knowledge, building extra income streams, and making your money work for you. Over time, you'll see that effort and discipline will bring the results you're aiming for. When we talk about building wealth, many people tend to want quick results. But the true secret of the wealthy is patience and long-term commitment. Robert Kiyosaki often highlights that real wealth comes from the gradual process of making smart financial decisions over time, not from shortcuts or instant success. Have you heard of the power of compound interest? It's a simple yet incredibly powerful concept that explains how money can grow exponentially when you invest and allow it to work for you. For example, if you invest just $100 every month, over time, that amount will grow, not just because of the monthly deposits, but because of interest on interest compounding over the years. That's what makes consistent investing one of the most effective ways to build wealth. Consistency is the true game changer. It's easy to feel discouraged when results don't appear immediate over time. Your decisions start to multiply. Just starting to invest, even with small amounts, is already a significant step toward a more secure and prosperous future. Every contribution to your investments, every financial lesson you learn, every habit you build is another brick in the foundation of your financial independence. Pro tip: at the start of every new month, commit to investing a small portion of your income and continue learning. Even if the results seem modest at first, what truly matters is persistence. When you look back 5, 10, or 20 years from now, you'll see that consistency was the key to reaching your financial goals. The power of time and patience is stronger than any trendy investment. If you found this content valuable and believe it could help others achieve financial freedom, don't forget to like the video and share it with friends and family who need to hear these principles too. Together, we can help shift the financial mindset and achieve success. And of course, subscribe to the channel and turn on notifications so you don't miss any upcoming videos filled with powerful tips to keep you moving forward on your financial journey. Let's build a safer and more prosperous financial future, step by step.